Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 30th, 2026, and we're diving into Chevron's fourth quarter 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Chevron, a leading integrated energy company, has just released its Q4 2025 results, and there's a lot to unpack, from earnings and cash flow to strategic initiatives and market conditions.
Revenue and profitability overview. Let's start with the financials. Chevron reported earnings of $2.8 billion for Q4 2025, with adjusted earnings at $3 billion. How does this compare to last year, John?
Chevron's reported earnings decreased from $3.2 billion in Q4 2024 to $2.8 billion this quarter. However, the adjusted earnings of $3.0 billion, or $1.52 per share, were slightly below the $3.6 billion, or $2.06 per share from the previous year. This decline is primarily due to lower crude oil prices and unfavorable foreign currency effects.
And what about their cash flow?
Chevron generated a robust cash flow from operations of $10.8 billion, reflecting strong operational performance despite the challenging market conditions.
EPS forecast and analyst estimates. John, analysts had forecasted an EPS of 1.44 for Chevron based on a survey of 7 analysts. How did the actual results compare?
Chevron's adjusted EPS came in at $1.52, which is above the forecasted 44. This beat expectations, indicating that despite the headwinds, Chevron managed to deliver better than expected earnings per share.
What factors contributed to this outperformance?
The outperformance can be attributed to higher margins on refined product sales and increased production levels, which helped offset the impact of lower oil prices and foreign currency challenges.
Strategic initiatives and production growth. Chevron has been active on the strategic front. Can you tell us about their production growth and strategic initiatives?
Absolutely. Chevron increased its worldwide production by 12% and U.S. production by 16%, reaching record levels. The acquisition of Hess played a significant role, contributing to a reserve replacement ratio of 158%. Additionally, Chevron announced a 4% increase in its quarterly dividend, reflecting confidence in its cash flow generation.
How has the integration of Hess impacted Chevron?
The integration of Hess has been successful, with Chevron achieving its initial $1 billion synergy target. This acquisition has strengthened Chevron's upstream portfolio and contributed significantly to its production growth.
Operational efficiencies and future outlook. John, operational efficiencies seem to be a focus for Chevron. What are the key highlights here?
Chevron achieved structural cost reductions of $1.5 billion in 2025, which is part of a broader program aiming to reduce costs by $3 to $4 billion by the end of 2026. The company is also advancing new energy opportunities in power, lithium, and hydrogen, positioning itself for future growth.
And what does the future hold for Chevron?
Chevron's future looks promising with ongoing projects like the Future Growth Project in Kazakhstan and new developments in the Gulf of America. CEO Mike Wirth highlighted 2025 as a year of significant achievement, with record production and industry-leading free cash flow growth.
Key takeaways. In summary, Chevron has delivered a solid performance in Q4 2025, with adjusted EPS beating expectations and strong cash flow from operations. The company's strategic initiatives and production growth are commendable, and the future outlook remains positive. Thank you, John, for your insights.
Thank you for having me. Chevron's focus on operational efficiencies and strategic growth positions it well for the future.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Chevron's performance in the comments below.